What's up, everybody? It is Chris. Yes, you probably have noticed the audio is a little bit better. I finally got a mic. So here we go. Today, what we're going to be talking about is basically how I use the 8 estimated moving average while I'm day trading, just kind of not necessarily to get into trades, but when I'm holding trades and kind of if they're going against me and I'm really trying to decide whether or not I should cut or if I think I want to hold, which usually is kind of predetermined, but there definitely are times when you're really going to have to make those decisions on the fly. I mean, for example, I want to go to PayPal. So I was pretty bullish on PayPal this day. I think I played PayPal, made some money. I was pretty bullish actually overnight, and obviously I was pretty wrong. But basically how I looked, so usually I obviously don't get in right away at open unless I'm playing, I don't know, a couple different things, but I try and stay away from that. So if I'm looking at, say, PayPal here on this day, and I was looking to get into calls, I was probably, I don't remember exactly, but hoping to break these kind of after hours pre-market highs and then break the previous day highs with some volume. But as you can see, we kind of started off with big red. And so as soon as I saw these the first candle here on the 5-minute close below the 8 EMA, and you can see that we kind of, like, we did come above it, but you can see that every one of these candles, including this super bearish hammer right here, which is basically just, like, if you look at it intuitively, a lot of you probably know what the hammer is, but it's kind of just, you can see how basically how you got to think about it is it opened here, it tried to push up above this previous resistance on the first couple candles, and it came all the way back down and below and closed below. So that kind of shows that the sellers took over the buyers in that candle, even though that wick is above. And so I would think that's a bearish candle right there. And you can see we really didn't get, even though these candles were closing above, they, one, weren't bullish candles, and two, they were kind of all, you can see, like, I like to think of this as selling pressure when you get these consistent wicks on the top. Even if you're moving up, it just kind of shows that every time it's trying to fight to that newer high, it's pulling right back. And then basically I saw this break, close below, and then another bearish candle below. And as you can see, we really didn't, I mean, you could have thought these two candles right here maybe would have indicated a move. I wouldn't have liked it just because of the size. And then this candle right here looks pretty bearish to me. So you can kind of just see how this 8 EMA is good when you're in trades, or if you have a trade in mind, say you're looking to play calls or you're looking to play puts. You can kind of use this as a guide to really tell you whether or not your thinking's right. I mean, for example, right here, we kind of had this indecisive first candle, which is very common. I mean, the reason a lot of people say, especially in options, to wait a little bit in trading is because if you're playing dailies, if you're playing weeklies, you lose a couple bucks in the morning on that first indecisive candle, and then you kind of get killed. So to avoid that, you could use this 8 EMA and basically see that there's kind of like this indecisiveness, this selling pressure right here. I mean, that candle looks pretty bearish, but you can see we held above this 8 EMA. And then right here, even though this candle opened here and came down below, it bounced right off support of that previous candle, the low right there, and came right back up, closed above it, and then right on this candle, on this second confirmation candle, you can see that we stayed above the 8 EMA. So that would be a good place where you could get confirmation basically, and then you could wait that 20-25 minutes, maybe enter in this candle, because you can see that there's also, not in this candle, you can see the big volume spike, and that's you can see that it's holding pretty bullish above this 8 EMA. You ride it all the way up, and you basically play it until you can guess these as the top, but these very well could have came down. We could have even had this candle, and you can see how it opened here and tried to come up a little bit, but it just came right back down. Right here is where you would say, okay, this is turning down to the upside. I don't necessarily want to stay in this, especially if this is a day trade. So that's something that's important to also keep in mind. This video is primarily talking about day trades that you're planning on holding for not very long, an hour, couple hours max, or otherwise, I mean, you could also be scalping. This is pretty good for that. But let me move on to a couple other stocks where you can kind of see it. I mean, here on this move up, and again, like I said, in the mornings, everything's indecisive because there's obviously going to be a large amount of volume, which is really good for options traders, but that's kind of a no-brainer in the morning, that there's going to be a lot of volume. And so, I mean, obviously, if it's a drastically larger amount than it is on average, that's something different. But you could basically use this 8 EMA here and see it kind of consolidating around it as it moves up and down a little. And then basically you would see this bullish candle, but there really wasn't that much volume. You can see a drop in volume, and then big volume right here on that green candle, which pops right back off the 8 EMA. And I mean, from there, going off the previous strategy, you could say enter calls in this spot and you would ride this up all the way, because there aren't really, I mean, right here is where, if you're playing the exact strategy I was talking about earlier, where you wait for those two bearish candles below, or two bearish candles that close and hold below, you would exit around here, but you still caught a pretty good move there. I mean, I know it's not dollar-wise that much, but this is a obviously relatively smaller stock, so that percent move is still pretty good. I'm just going to keep going here and just to kind of show, maybe looking at some reversals. I mean, you can kind of see, especially with Heikin-Ashi candles, it looks pretty good too as well. I like to use Heikin-Ashi. Just honestly, I think it's a mental thing for me. You can see how when you change, you kind of, some of these red candles turn to green, basically, like I'm guessing some of these red candles over here, yeah, so they turn to green basically because it's a red candle, which I think for a lot of new traders, they see that and they kind of freak out. But if you're moving up, as long as you're making higher lows, that's kind of the big thing, is basically you see this bottom out where it kind of starts to turn here. It starts to get this curl a little bit, keeps going, curls, and then here you get these higher lows right there, higher low, and then you get these strong bounces, higher low, and that's kind of where you play it, just in terms of day trading, and that's a little bit more of kind of your mental game in trading. But this is definitely something that I think has helped me not only hold on to trades longer that I should, or cut trades. I mean, primarily this is cutting trades earlier than you would have if you weren't really looking at this. And I mean, it's not perfect. It's like anything. You have these two bearish close here, but it comes back up, and I mean, it doesn't even make that. So it really does indicate that you're kind of going bearish on the day. You can obviously use a couple other things, but this is definitely something that I like when I'm planning on getting in and out of trades pretty quick. You can see here on AMD, I gotta get out of this. You can see kind of here on AMD, like maybe in this area. I mean, this was kind of a weird move. You had this big bearish fat red candle here, and then a big drop in volume, kind of where we just chop for a little bit, and then we seem to pick it up towards the end of the day, towards the upside. So that's not the best example, but I mean, in something like this, if you were to get into calls in the morning, or say you got into calls down here playing this pre-market low, the bounce off that, which is also a good play. I actually am thinking about making a video about the pre-market plays, just based off pre-market highs and lows. But regardless, say you're in this play and basically you see this big selling pressure here, and then you see this pretty bearish. I mean, this candle right here is pretty bearish. I would even consider this candle bearish. I just don't really like how this looks. But you could use this and see, oh crap, we're really coming down below here, so I might want to cut, which ended up being a good decision there, as we made a pretty big move down from up in like the $80 level all the way down to $78.40. So yeah, that's pretty much it for this video. Just kind of going over using the 8 estimated moving average and how that can, or the exponential moving average and how that can help you in your day trades. I hope this was helpful. I hope the sound quality was better. As always, please like and subscribe. It really helps out the YouTube channel. And I hope everybody is doing well today. Stay green.